Tech predictions for 2025, navigating challenges and opportunities. Since early 2023, tech companies have been aggressively cutting costs, a trend that is set to dominate 2024 and extend into 2025. The reason? Overhiring during the COVID-19 pandemic. When remote work became the norm, tech companies seized the opportunity to expand their workforce rapidly, recruiting engineers worldwide, including many junior developers fresh from bootcamp courses. The overhiring frenzy was driven by the belief that the demand for digital products and services would sustain its meteoric rise. But as the dust settled, it became clear that the anticipated growth didn't materialize. Consumers and businesses alike weren't buying at the levels tech companies had predicted. The challenges facing the tech industry today aren't the result of one catastrophic event, but rather a confluence of unforeseen circumstances. The war in Ukraine disrupted global supply chains, destabilized markets, and contributed to inflationary pressures. Meanwhile, the U.S. Federal Reserve's interest rate hikes dampened consumer spending, making borrowing costlier for businesses. Adding to the turmoil, consumer habits shifted as people became more cautious with discretionary spending. Compounding the issue was the overhype surrounding AI technologies, which, while promising, have yet to generate the transformative returns investors had hoped for. The net result was a financial squeeze that left tech companies unable to meet revenue and profit margins. For tech companies, meeting margin expectations and maintaining stock prices is paramount. When revenues fall short, cost-cutting becomes inevitable, and labor is often the first target. Mass layoffs have become a painful but familiar cycle in the tech sector. The overhiring during COVID-19 has given way to an era of layoffs, as companies attempt to recalibrate. This cycle of overexpansion followed by contraction isn't new. It's a recurring theme in the tech world, as companies grapple with the inherent risks of rapid innovation and market volatility. Faced with financial pressure, tech companies are now leaning heavily on two strategies: hiring cheap labor and integrating AI to reduce operational costs. However, these approaches come with limitations. Cheap labor may help balance the books in the short term, but often leads to lower quality products and services. Similarly, relying on AI to replace human talent is fraught with challenges. While AI can boost productivity, it cannot replace the ingenuity, problem-solving, and expertise of experienced engineers. In fact, there's growing evidence that consumers are willing to pay a premium for high-quality products and services. Cost-cutting at the expense of quality is a short-term fix that risks alienating customers in the long run. By late 2025, tech companies will find themselves with few remaining costs to cut. The realization will dawn that the only way forward is to deliver truly innovative, market-dominating products once again. This phase could be dubbed the AI revolution or AI transformation, as companies pivot to integrating AI not as a replacement for engineers, but as a tool to enhance their capabilities. This shift will reignite demand for top-tier engineering talent, particularly senior engineers with expertise in emerging technologies. By the end of 2026 and into 2027, hiring will surge as tech companies focus on creating products that set new industry standards. For software engineers looking to future-proof their careers, the key is to focus on acquiring skills that will be in demand during this new phase of innovation. If you're interested in learning which technologies and skills will double your income in the next hiring cycle, check out the detailed guide in the next videos. Tech's cyclical nature reminds us that while challenges are inevitable, they are also opportunities for those who adapt and prepare.